Welcome back to the channel. All right, today we are going to do Bitcoin, Ethereum, EGLD, and Cardano, our four coins that we've been sticking with for quite a while to do our TA. And this is going to be an interesting TA. If you've been following me on Twitter, you've seen that I pointed out a pretty clear inverse head and shoulders pattern on Bitcoin a couple of days ago, and let you guys know that at the time, my prediction was that this is going to shoot up to 60K. I'm going to show you how I came up with that prediction. It's pretty simple. It's a tactic that you use with inverse head and shoulders to give you an idea of what this could break out to if it does break out. After that, we're going to go over a couple of news articles for Bitcoin, followed by Ethereum, EGLD, and Cardano, and we're just going to jump into it and get started because we have a lot to go over. Actually, right before we start, make sure you follow me on Twitter, make sure you follow me on Twitch, and make sure you subscribe to the YouTube channel. All the info you need is in the description, so just click the description. You'll find all my social links there. Make sure you follow. Now let's get started. All right, so we're going to kick it off with Bitcoin. Now, Bitcoin has been going through a pretty serious consolidation for the last couple of weeks, and it's been a pretty great consolidation, honestly. I mean, if you look at the VPVR on the right-hand side, just look at how that stands out immediately off the bat. I mean, it is showing us a massive level of support at the $47,000 to $48,000 range that is equivalent, if not rivaling, the support that we saw below in the $30,000 to $38,000 range. There's some areas where it's peaking above, and if you look at the larger VPVR range, you'll see that we're building up a good amount of support that is starting to look similar. I mean, granted, we still need to trade between 50 and 52 to 54,000 for quite some time in order to build up more support. But you'll see what happened here after we broke through 38 and 40,000. Between 40 and 46,000, we really didn't have much trading in this range. We just shot past it. So there's a good case to make that once we cross past 55 again, we might just skip 55 to 60 and just start trading in 61, 62,000. And that would justify our prediction of this line here. I'm going to change the color so it looks a little bit more clear to you. Let's make it yellow. So this yellow line here was our prediction of where this inverse head and shoulders pattern would go. Now, pretty much, I'm just going to go over this with you very quick on Bitcoin, right? So the inverse head and shoulders pattern, normally when you see this, you're looking for a left shoulder and then a head and then a right shoulder. Now, if you have a head and shoulders pattern that is not inverted, so if you flip this and it was opposite, that's usually a bearish sign that you're going to have a drop. And the way that you judge the length of the drop or the length of the move up is by looking at the neckline, which is this line up here that connects the head and the left shoulders, the line right on top, to the bottom of the head. So what do I mean by that? Basically, you take a line and you can draw the line starting from the neckline down to the head, okay? So you draw it to the base of the head. Now, if you take that line, this gives you a good estimate of where your price is going to go. And if you compare it to the line that I created, it is from where we are now, from the neckline, it is about the same. I always go a little bit conservative, so I shortened my line just a tad, just because, I like to go slightly conservative just to err on the side of caution. So either way, that doesn't make a huge difference. We're talking about going from 60,000 to 60,600. It's not a massive difference, but that's how you calculate the price target. So we calculated that price target about 3 days ago, and you'll see that once we came back to the neckline, we did in fact break out of it. Now, the interesting thing is that with Bitcoin, we are actually starting to trade slightly sideways on top of this yellow line, which is great because now we're starting to get support at this yellow line. And what that's really doing is cementing that we may now be in a new trading channel. We might be past this trading channel at the bottom and moving into this upwards trading channel, which is really good because if we stick with this trading channel, then it's very possible that we continue to gain support here and slowly start moving upwards. And if we do, that's going to confirm that the inverse head and shoulders was accurate. So that's one main thing you want to keep a look at with Bitcoin. A little bit of sideways trading and even a drop here down to the yellow line to 53,000 about would be good because you'll see on the 4 hour, if you look at the RSI down at the bottom of your screen here, you'll see that we're trading at around 70% on the RSI. It's not overextended, but we've gone up so quickly in the last 24 hours that that RSI has gone pretty high. So seeing some sideways trading here and possibly a little bit of a drop by maybe $1,000 won't be a bad thing, because that'll bring the RSI down a little bit and give us more room for upward momentum. So we want to keep an eye on that. If we look at the larger picture now, what I'm really looking to see is when we are going to break past 60,000, how do we interact with 60,000? You would anticipate that at 60,000, you would reach resistance. So we might see the price move up and trade sideways a little bit in the middle of this channel. But what's going to be very interesting is if we break right through this channel, break 64, 65,000 and flip that green line into a support line. If we hit resistance at that green line, break above it, and then turn it into support, then we could even be looking to hit 70,000, 75,000 before the end of the month. And there's one other thing to remember about this month that's very interesting. Jerome Powell is speaking on the 17th, and he's going to give a lot of information about the United States bond market and the treasury yields. And that information, if it's negative for the bond market, could be immensely bullish for Bitcoin. Part of the reason we might be seeing a lot more momentum coming into Bitcoin now is because of that anticipation. Now, if the information he gives out on the 17th of March is not good for Bitcoin, then by default, it's going to be good for the bond market. It's going to be saying essentially they're going to increase bond yields. Bonds are going to become more valuable. So then you might see some money moving out of Bitcoin and going back into the bond market. And that could be from much higher net worth individuals who may not have as much strength in Bitcoin, but have put some money in here for the short term. So keep that in mind. March 17th is going to be very important. And I think that after March 17th, we're going to get a clear indication of where Bitcoin's going to go until the end of the month. So if after March 17th you see a big move up, then you can expect that 60,000 is probably going to be gone. We'll probably never see it again if we break into 70 and 75. Then we might come back and touch 60,000, but it might just be touching it as brief support. Okay, so let's go ahead and continue moving forward, okay? The next thing I'm going to do, I'm not going to go too much more into Bitcoin, because basically what we're looking at now is what I just told you. We're looking to see, do we flip the yellow line as support? Do we break out and go into the 60,000 range? And if we do, how do we interact with the green line and 60,000 itself? That's key for Bitcoin right now. That's what we're going to be watching. One thing that I do find interesting, I'll wrap it up with Bitcoin and move into the articles right after this, is that we have not seen a spike in volume yet. If you look at the volume profile for Bitcoin here at the bottom, so the volume based on these 4-hour candles, you'll see the volume is still trending down. Now, what that means is that even though the price has been moving up, it's been moving up gradually, and a lot of volume has not spiked in. So that means that if Bitcoin truly is this bullish, and we are looking for an upward break out of this inverse head and shoulders, then as soon as that volume comes in, there's no reason that we don't push right past 60,000. So keep an eye on the volume. That's going to be really key, because honestly, I don't know if we're going to get opportunities to buy at 44,000, 45,000 for Bitcoin ever again. It may not happen. It could happen, but it might not happen. So plan accordingly, do what you got to do, but just take the information into consideration. Let's move on to the news. So the first news article I want you to look at is this one. It says Norwegian oil billionaire says Bitcoin could be worth millions of dollars each, puts liquid company assets into Bitcoin. Let's scroll down. He says here, Bitcoin may still go to zero, but it can also become the core of a new monetary architecture. If so, one Bitcoin may be worth millions of dollars. He added, the direction is clear. Finance will be disrupted as surely as fossil fuels will be. The question is not if, but when. Now think about what he's saying. He is basically talking about the financial system as it currently stands being disrupted. If you don't know what disruptive innovation is, that is innovation and technological change that disrupts a market. And I want you to think about, let's go back and explain to you what this concept is, because it's very important. So if you think about disruptive innovation, think about Apple computer. So Apple used to make just Macintoshes long time ago. That's all they did, right? They didn't have iPhones yet. They didn't have any of that. And then they came along and they said, we're going to build a phone that can also serve as your iPod, you can have your music on it, it's going to be a phone, there's going to be no buttons, it's going to have a touch screen. And you know what other companies said at that point, like Nokia and BlackBerry? They were like, oh, nobody's going to want that. Nobody wants a phone that doesn't have a keyboard. They didn't see the future. Apple did. They created a disruptive technology. They created the first haptic touchscreen phone. And when they created that, they took over the entire cell phone industry. They changed it. You don't see anyone with Blackberries anymore. I mean, unless they're, crazy. I don't know. I don't know why you'd have a Blackberry now. Not one of the old school ones. But I used to have a Blackberry a long time ago, and I loved it. But once the iPhone came out, that's it. Blackberries were done. Flip phones, for the most part, were done. You didn't need them. That's disruptive innovation. They came in and they changed the cell phone game. They changed the entire market for it. They changed why you would ever need an iPod. People don't really have iPods anymore, right? They took that and merged it into the phone. So they took the entire iPod community that they had already built, they merged it with the cell phone community. They came up with a better product that took Apple to become one of the most valuable companies on planet Earth. Now you have Bitcoin. Bitcoin is disrupting the financial industry. So what happens when it becomes the disruptive innovator of the financial industry? The value skyrockets, and it can go to a point. Think about what you're disrupting. The cell phone market has a cap, right? But the financial market doesn't. There's hundreds of trillions of dollars that need to go somewhere, and they're printing more money. If Bitcoin really becomes a true disruptive innovator of the financial system, what this guy is saying is correct. Bitcoin could be worth millions of dollars per coin. And we might just be at the beginning of that, so keep it in mind. All right, let's move on to the next one. This one says, one of China's top internet app makers, Mewtwo Inc., is adding up to $100 million worth of cryptocurrencies to its treasury, joining a growing list of companies worldwide to do so. The company has already purchased $40 million worth of Bitcoin and Ethereum for its balance sheet. They have purchased 15,000 Ethereum and 379 Bitcoin. That's a value of about $22.1 million for the Ethereum and about $17.9 million for the Bitcoin. They are coming in as well. Now, keep in mind the articles I just showed you. One is a Norwegian oil billionaire. The other one is a Chinese app maker. You also have Tesla. You have MicroStrategy. This is not one place where this is happening. These are large companies across the globe, across the entire earth, that are all buying Bitcoin. And this is just the beginning. Keep it in mind. Take with that what you will. You have to deduce these things and come up with an understanding for what you think is going to happen to an asset. And you can think of it in a variety of different ways. Maybe they're all stupid and they don't really understand anything. Or maybe they're smart and they understand a lot more than we think. Keep it in mind. Let's move on. We're going to go straight to Ethereum. All right, so with Ethereum, we have seen some interesting movement as well. The first thing that you'll notice with Ethereum is that we are looking at somewhat of a head and shoulders pattern. Same thing we saw in Bitcoin. Here you have the left shoulder. Here you have the head. And here you have the right shoulder, and now we are breaking out. Now, what does this mean for Ethereum? Well, if we take this backwards, I've showed you how you really look at a head and shoulders pattern, so we don't need to draw out the whole pattern. We just need to identify the neckline, and you'll see the neckline falls right at this green line in the middle of my chart. So I'm going to make this a little bit bigger for you guys so you can see it. But pretty much, I drew out the head and shoulders pattern on Bitcoin. I'm not going to do it here because it's just, I want to show you how to analyze this without having to draw the entire chart. But we basically see here, we have our left shoulder, we have our head, we have our right shoulder. Now, if we want to identify where does this look like it's going, the green line up here hits the left shoulder. It also hits both sides of the right shoulder. So what we're going to do is we're going to do a line from the top of that neckline down to our head. Okay? Now what we do is we take this line and we move it over from the bottom of our neckline, so which is at that green line there, up to the top, and you'll see that our target for Ethereum's breakout is roughly $2,000. It's 1986. So Ethereum, based on this inverse head and shoulders, should be headed back to 2000. Now we want to see what type of resistance it hits along the way, because Ethereum did take a massive consolidation drop. But the good thing about Ethereum is that it put in a significant amount of volume here. Now Ethereum is still in a bit of a unique situation because the gas fees are so high. It's purely speculation right now. I mean, DeFi is an emerging market, and Cardano seems to be taking some market share and sentiment from people that it may be coming in to swoop into Ethereum's market share. Then you also have BNB doing a lot of smart contract type swapping in the DeFi space as well, and that's taken some market share away from Ethereum. Now, the thing that you want to keep in mind is even though BNB grew quite a bit, and so did Cardano, Ethereum is still doing pretty well. Now, the key there is that a lot of people tend to believe in the long-term future of Ethereum. I personally think Ethereum has potential, but I think Ethereum has some inherent flaws. I don't think Vitalik is as good of a coder as people give him credit. I think that there have been a lot of design flaws with Ethereum. That's why they're now trying to move to proof of stake. It's why the gas fees are so high. These are flaws that as a good coder, you don't allow them to happen early in the stage of development of something that's worth so much money. You take your time and code it correctly. And, granted, he might be a good coder, but I don't think he's as brilliant as people think he is. I think he's a guy that had an idea and programmed it and made a community, and then a bunch of the founders of that community have started building their own things because they have seen the issues with Ethereum. That's why you had Gavin move over and create Polkadot, why you had Charles Hoskinson move over and create Cardano. You have to look at the big picture. I see potential with Ethereum, but it needs work. And they need to first and foremost fix the gas fees. Okay, now with Ethereum, if we look at the price information, we're just seeing something very, very standard here, and that is that we are coming back into this red area. This red area now sits at around 1830, and we are looking for the price to break 1900. That's where this trend line is, and then we're looking for the price to break 2000. What we want to see is what we had talked about in this area, okay? We had met on this channel numerous times when Ethereum was about to break out to 2000, and I told you when Ethereum hits 2000, we're likely going to retrace back to 1830 and possibly back to this trend line. Now, I didn't call that we would go all the way back to 1300. I don't think anyone could have called that. But I did tell you there was a chance of us coming back to the 1700 area. Now what I'm going to tell you is that we have a lot more support below us that we did not have before. So if we see Ethereum go back up to 2000, I'm going to expect it to hit as far as 2100 before it comes back down and tests 2000 and possibly even tests 1800 again. It needs to put in more volume in this area before breaking past 2000. I could be wrong about that. It could shoot right up to 2300, 2400. But if it does, there's a good chance it's still going to come back and test these areas. So keep that in mind. Ethereum has been doing a lot of retests in pretty much all of its movements. When we moved up from $1,000 all the way up to where we are now, you'll see all these pumps resulted in retracements coming back down. The retracements got smaller over time. So in this sense, I'm expecting after this big retracement, when we move back up, we're going to have a smaller retracement. We probably won't go below 1800 again. And if we do, 17 might be the max. I don't even know if we'll go back to 17 again once we break through 2000. So keep that in mind with Ethereum. And remember, with Ethereum, there's a lot of cards on the table, mainly being the gas fees and the usage of the network. Right now, the gas fees are so high that people don't want to use Ethereum. It doesn't make sense to do transactions on Ethereum that are going to cost you more than the transaction is worth. So keep it in mind. That's what's up with Ethereum. We are going to move on to EGLD, which I know is why a lot of you are here. So let's move on to it. You always need the background though. All right, so for EGLD, we're actually going to switch to our dedicated EGLD chart, which is here. All right, so now with EGLD, we're seeing a couple of things. And I actually wanted to make some changes to this chart, but I decided not to do it, and I'll make the changes while we are making the video. So basically what we're seeing here, this is our symmetrical triangle we were watching for a while. I'm going to turn off the moving averages and a few things, so we could just focus on the triangle. So this symmetrical triangle is what we were looking at with EGLD for quite a while. And you'll see here, this was a major consolidation for EGLD. We came up and we hit the top of the triangle, we consolidated all the way down, back up, hit the bottom of the triangle, hit the bottom again, hit the top, and now we started what looks like a breakout. That's what it looked like. That's what we were expecting. But now what it looks like this is turning into is a larger triangle. So the first thing we're going to do is we're going to adjust our triangle to match the current trend, because we would have needed a larger breakout out of this to confirm that we were breaking out. But right now, the trend that I'm seeing is a larger symmetrical triangle. So let's go ahead and draw that in. All right, so we're going to take this line and we're going to move it to our confirmed tops, all right, which is about there. And you always want to extend the line out a bit to give yourself more room. Now, there are two ways you can do the bottom line. Okay, the bottom line you can do the conservative way, which is coming, hang on, let's unlock this, which is coming to the bottoms of these areas. Let me see if I can zoom this in a bit more so it's a little bit clearer for you. Okay, there we go. So you can do this in one of two ways when you're doing this symmetrical triangle, right? You can use the bottoms of these, or you can use the candle, like you can use the candle wicks, or you can use the candle bases. So if we use the candle wick, right, and we come down to this level, it gives us a much bigger symmetrical triangle. I don't want to do that just yet. It's possible that that's where we're headed, but right now I want to use the candle bases. And if I do this, basically what it's showing us is a shorter triangle. And I always go with the shorter triangle first because we don't know what's going to happen with the price. If the price keeps moving upwards, then this might even be a shorter triangle, right? Then we might have to bring it in to the rest of the candle bases. And let's just look at each option. If we look at this right now as the triangle and just ignore the line that goes across from it, if we look at that as the triangle, then that means one thing to remember about symmetrical triangles is you normally have a move at around 70% of the apex of that triangle. So this is the apex here, the tip of the triangle. Now, 70% of that apex is usually like around this area. And we're kind of trading there now. We could basically be in the area now that we'd be looking to break out of this consolidation pattern. And the reason that happens is because when you're in these triangles and you start moving up and down in price, like you keep consolidating that price, it builds pressure. It builds a lot of pressure. Think of it, I gave this as an example before. It's like taking a basketball or a volleyball or some type of inflated ball and putting it into a pool, and you're just holding it down. Eventually, you're gonna lose strength in your arms. You're not gonna be able to hold it down. You're gonna let go and it's gonna shoot up. You know, I mean, in this case, it could also shoot down, but normally it's going to shoot up, right? The pressure is going to build and it's going to spring out. That's what happens in this type of consolidation pattern. And you can see this is following that very well, because if you also look at the volume at the bottom, since our last gigantic move up, the volume has just been tapering down and tapering down and tapering down, and it's gone down so low now that we're reaching a point that the volume is going to come back. And when that volume comes back, something big is going to happen. The triangle is for you to help, it's to help you identify when is that going to happen. So one thing, if we look at this triangle, that tells us that it could happen anytime between the 9th, which is now, and the 11th, because that's when this ends. That's this period of time. So if you scroll to the right here, look at the bottom of the screen, all right? You see these areas? This is the 8th, right? These are dates, right? So this is March, that's March 8th, that's March 15th. And if you look at, when I have my mouse here, you can see at the bottom the actual dates. So where we are now is March the 9th at 1100. If we scroll to the right, the triangle ends at March 11th. So that means that this area here in the first triangle gives us a 2-day window that something big could happen. But we can extend the triangle even further. So let's extend the triangle a bit more. If we extend it down to the bases of these, right? If we go down to the bases of these candle wicks and we ignore these candle wicks at the bottom, then we are saying, okay, there's potential that the price may hit this top where we are now and then drop back down and get support here at this line at around 130. And if that happens and then we start going back up and completing this triangle, that means that the breakout would be somewhere in this area here, right? And that would be from the 12th all the way to the 16th. Now, what does that do? We looked at two different scenarios. That tells us we have a wider range. So if we look at the entire range, that means that anywhere from the 9th through the 11th, we could have a breakout if we are in the smaller triangle. But we could also have a breakout anywhere from the 12th to the 16th. That is pretty interesting because that correlates exactly with the guy talking about, like Jerome Powell talking about the United States Treasury bond and yields on the 17th. So it's kind of weird that everything is correlating back to that date. And what that could mean is on the 17th, he has that talk. If he gives bad news for the bond market, Bitcoin spikes and takes all the rest of the crypto assets with it, including eGold. And we could see a massive bounce on the 17th or the 18th. And that falls right in line with this triangle. It's just speculation, though. I mean, I'm just guessing. But either way, I wanted to show you these potentials because what I'm looking for after looking at these triangles is that we are likely going to see a move sometime between now and the 16th. If we do not see a move by the end of the day on the 12th, then we are looking to see a move by the 16th or 17th. Keep it in mind, that's our range for eGold right now, where we're expecting something to happen. The only other thing that I'm waiting to see with eGold is when will the volume come back. That's the key, because the volume coming back now is the next major signal that the move is about to happen. So keep that in mind. We're going to keep watching it. We're going to see what's going to happen. And I'm going to probably have a lot more videos over the next week or so, since I think we are going to see some major movement with eGold very, very soon. So let's go ahead and save this chart. Now we're going to take a look at the moving averages. Okay, so if you see the moving averages, I've talked to you about these a lot. And I remember telling you when we had this bullish cross here that with eGold, what you really wanted to see was the blue line continuing on an uptrend, the orange line staying below the blue line, the aqua line staying below the orange line, and the red line staying far below. And every single one of those things has happened. And you know what is great about this? Look at the new triangle we created. All right, the new triangle we created, the bottom from where we are right now is right at the red line. The red line is the 200 exponential moving average. So that tells us that we know that we have a ton of support right at the bottom of this triangle. It kind of gives more credence to this triangle being accurate, meaning that we might be looking for the next major move by the 16th or 17th, and that could mean that in the short term, we may see some consolidation back to 130. No guarantee, though. I mean, we could just break out of this. It could go either way. But I'm just saying what I would like to see is for eGold to retrace back to around 130. And if it does, we can all buy some more if we'd like. And then I would like to see it move back up and hit resistance at 145 and really complete this triangle. You know, if this happens, we can buy more. If this happens, we know that something's about to happen. And then here we could just sit down and watch and wait for that to happen. So keep it in mind, do whatever you got to do. And remember, nothing I tell you is financial advice. I'm just telling you what I'm seeing on the charts, and the charts are looking good. The moving averages for eGold are looking great. We've been getting a ton of support on the blue line. We've really been hugging that blue line. We also got a lot of support down at the aqua line when we went down to it. So basically that means the 20 exponential moving average, the 50 exponential moving average, and the 100 exponential moving average have been giving us major support, with the bulk of that support coming from the 20. And every time we have seen that in the past, it has led into a major run-up. And here is a good example of it, right? These areas where we were hugging the 20 exponential moving averages, we spiked up, and we are starting to do that again. If we have a slow uptrend and we keep hugging that blue exponential moving average, you can expect that soon enough, this is going to be a very small pattern, and we're going to be looking at a much larger one. And I want to show you how that happens, okay? So you see down below how this looks so tiny. You see this area here? This looks small, right? It looks like no big deal. That's the past. But if you zoom into it, okay, and you go back to February, look what happens. That's a major pattern. That's a long, month-and-a-half long consolidation that we went through, and it looks tiny now. It looks irrelevant. And that's what I want to see happen to where we are now. I want this entire gigantic triangle we're looking at to be a thing of the past, because we are so far up ahead of it that this just looks like a small consolidation. And that's what's going to end up happening, in my opinion. Now, the last thing we look at with eGold is the Bollinger Bands. And I've told you this numerous times with the Bollinger Bands. Once the Bollinger Bands start getting very constricted, we are looking for something big to happen. We saw that happen in a lot of instances. Here, the Bollinger Bands got very constricted and we had a huge run up. Here, the Bollinger Bands got very constricted. We had a dip. Here, the Bollinger Bands, actually, they didn't even get too constricted there. They got somewhat constricted here and we moved up. They got somewhat constricted here and we consolidated, but now they are getting more consolidated than they have in a while. And I'm very curious to see what happens, because if they just keep getting constricted into this triangle and the Bollinger Band here goes like this, the Bollinger Band here goes like this, whew, that's going to be huge. We might have another situation like this on our hands where the price goes up. You know, we could see if the Bollinger Bands get like they were down here, like legitimately, we could be looking for a 200% move. Possibly. Speculation. Don't get too excited. It's all speculation. I'm just giving you all the potentials. These are all potentials. Take the information, come up with your own strategies, and for the love of God, do risk management, okay? Manage your risk. Don't make trades where, you know, if you lose, if you're wrong, you've lost everything. That's not the way to do it. You know, you're not going to go to the casino and just bet everything on one color. No, you're going to make smarter bets, I hope. So make smarter bets, do things right. I hope this information gives you a good idea of what may come, what are the different options of things to come, and I hope you prepare. You know that I always look at the bearish side too, but right now I'm just not seeing too much bearish fundamentals with eGold. But if it does drop, if eGold for any reason falls below this area of the triangle, we are looking for a lot of support at around 100, because we confirmed that we got that support here once before, and we don't have a ton of trading volume here. So we would expect that if it does for any reason drop back here, we're going to see a lot more trading here and people buying it up at 100. So keep that in mind just for the bearish side. And I don't want to get you too excited, but I'm pretty bullish on eGold right now. And I'm seeing a lot of things that indicate we are looking for a move up at a certain point in time. But remember, what happens with Bitcoin's very important. If the bond yields and that discussion Jerome Powell has on the 17th is negative for the crypto market, it could hurt the entire crypto market, including eGold, including Ethereum, including Bitcoin, including Cardano. And with that, I think we're done with eGold. There's not much else to look at right now. Keep up with hypergrowth. Look at the posts made on the Elrond Network Twitter. Look at growth.elrond.com. There's a lot of good charts and analytics there that I kind of look at every day, but we don't necessarily need to go over them for TA. And yeah, keep seeing what's happening, because another bullish thing with eGold right now is the strides that it's making in the DeFi space. The fact that eGold is rolling out functionality for DeFi at such a high level this quickly is very, very indicative that there's going to be a price move up as people discover the value. So it's another reason why I think the asset's very bullish right now. Let's move on to Cardano, all right? How are we doing on time? We are at 32 minutes. Wow. Okay, so let's do Cardano, and then we're going to wrap up this video. Okay, so with Cardano, we had made a prediction a little while ago. So let's take a look at our prediction. And let's take a look at where the price is going. All right, so we're going to get rid of the Bollinger Bands. We're going to get rid of the EMAs. So you'll see what the prediction here, and it's kind of, you know, I mean, it's kind of stayed within the levels, but the prediction was definitely not accurate. So you'll see here the prediction we made that we were going to go sideways, we were going to go up. Our prediction intersected with the price here, and that was a decent enough area, but we actually fell below, got support at the $8 range, and we got major support at $15. The good thing is, in my last video, I did call out these areas as support areas. So I hope that helped anyone who was looking at Cardano. This prediction, though, we can wipe it out. We don't need it anymore. So now basically what we're looking at with Cardano is actually quite interesting. What we're looking at with Cardano is a major symmetrical triangle forming. If we take a look at it like this, you'll see that it's actually, that's how you'd want to look at this. You'd want to look at it from all the major wicks that we've hit. Hang on, let's get that right. Okay, so we'd want to look at Cardano like that. And then you would want to put another triangle down from here up to there. Now, basically what this is showing me is if this symmetrical triangle actually holds and we don't fall below it and we hit support on it, it means that Cardano is already breaking out. So Cardano is already starting its breakout out of this symmetrical triangle. Now, granted, the symmetrical triangle could get extended like I showed you with EGLD, but for that to happen, we're going to need to see more trading in this range, right? If that happens, then you have a higher line you could set. But right now, that's not happening. Right now, what it's looking like is that this initial symmetric triangle that was created for Cardano, it's in the midst of a breakout from it right now. And you could even take this one step further and, you know, bring this symmetrical triangle down a bit more. And if you did that, it would look a little bit more like this, right? So if you do this, that's actually a bit better. Yeah, because we hit all the tops. So pretty much, if this is actually a breakout out of this symmetrical triangle, which is what it looks like, then I would expect to see support at $1.13, meaning that you don't want to see it fall below $1.13 and then fall underneath this triangle apex, because if it does, then that means the triangle, it's not broken out yet. It's still consolidating. But if it gets support here or gets support in any range that it's in right now, anywhere from $1.13 to $1.20, and then breaks out past this trend line, that trend line there, if it breaks out past that level, which right now is sitting at around $1.22, and flips it into support, so if you see a move like this, like that, and then it flips this into support, the uptrend has begun. That's what you want to see with Cardano right now. Cardano targets haven't changed. Cardano is just doing a consolidation, and you have to expect that after the run Cardano has had. It needs to build volume, and it's starting to do that. Ideally, I would like to see Cardano go back to $1 and build a lot more volume here. You know, that would be great. But we haven't seen that yet, and there's no indication that that's going to happen because it is so bullish. So as long as it does stay in that bullish form factor, I want to see more volume come in between $1.20 and $1.30, and I want to see Cardano go above this trend line and trade on top of it, and then break through $1.50. That's going to show us the true next leg of Cardano as it starts moving up, and I want $1.50 to become support. So I'm expecting something like this, but there's no guarantee on exactly when that's going to happen. I have not seen anything that has made me bearish on Cardano yet. So with Cardano, I'm very bullish, and there's just not a lot more other than that to tell you about the chart. It's a very simple chart. There's no head and shoulders pattern, nothing like that. All we're seeing right now, I mean, you have a potential head and shoulders, but you know, that would be if you look at this as a left shoulder, this as a head, then you would really need to see something like that. And then that would be your right shoulder, and that would be pretty bearish, but it's not. That's just pure guesswork right now. There's no indication that anything like that is happening. So right now we're just going to look at this, and we're going to figure out what happens next. I mean, Cardano has room to move, so keep it on your radar. All right, I'm going to put this triangle into the actual Cardano chart. I didn't realize I was on my EGLD chart, so this is for EGLD. We will save the EGLD chart, and for EGLD, I'm going to turn on the moving averages, Bollinger Bands, and then we'll save that. We'll go back to Cardano. So with Cardano, that's pretty much it. Keep an eye on it. There's not a ton to tell. You have clear levels that you're looking at right now. We're looking at resistance at $1.20. We need to flip that into support. Below us, we're looking at support at $1.03, and up, if we break out, we're looking to trade above $1.30. Right? Those are the key things. Flip $1.20 into support, break through $1.30, and start a trend upwards. And we want to see a breakout past $1.50. If we go past $1.50, that's really good. That's showing more bullish momentum. If we don't work past $1.50 yet, then technically everything you see is going to be a lower high. And a lower high means you're still consolidating. So if it takes this pattern, it's still a consolidation. It could be a longer consolidation. Once it breaks past this high, then you know you're seeing bullish momentum. Okay? In short, see that high? Then you have a higher high, then you have a higher high. We want to see a higher high. If we start seeing lower highs, that's consolidation. Okay, pretty simple. Simple concepts, and we're just going to have to keep watching Cardano. As far as the project goes, haven't seen anything bullish about Cardano. It's just all been good. It seems like the sentiment is changing. A lot more people are getting into it. The volume profile looks really good. And, you know, the overall volume is trending down, which means at some point volume is going to come back. It's looking bullish, just like everything else right now. So we got to keep that in mind and see what happens with the market. The key right now, I think, is to watch what happens with the big dog, Bitcoin. Bitcoin, I think, is going to lead the way. So we have to watch it to get an idea of what might happen with everything else. And it's going to be very interesting. That's about it for today, you guys. We've gone through a lot. I know it's been a long video. I hope you enjoyed it after a 5-day break. I think this was a good idea. I want to thank all the people that are watching this on Twitch in the live chat. I'm going to get with them soon and answer all their questions. So if you're watching on YouTube and you want to see the Q&A portion, make sure you go over to Twitch and you can look at the past broadcasts and fast forward to the end. You can watch the Q&A and it should be good. Thanks for joining us today. Make sure you do your risk management, make sure you do your research, and make sure you do some charting. Look in my description. I have links to all my charts. Well, not to the Ethereum one, but I have links to the Bitcoin, EGLD, and ADA chart. If you want a link to the Ethereum chart, let me know. Maybe I'll add that one next. But for now, you have links to the Bitcoin, EGLD, and ADA, so you can follow what I'm doing. Follow me on Twitter if you want my updates. I try to give you updates only when I have value. So when I see something on the charts that might be worth looking at, I'll tell you. I'm not going to post random things that have no bearings or bearing on what's actually going on. You're not going to see junk from me. That's about it, you guys. Thank you for joining me. Have a wonderful, wonderful day. And subscribe if you haven't done that already. Peace.